to another present here. Here I'm going to say about receivables management. So first we are going to see what are the content in the presentation is introduction of receivables management, and second one is forecasting the receivables, and third one is dimensions of receivables management. In receivables management, it is the introduction. Receivables management is referred to as due owned by the customer for the goods purchased from the firm or services rendered by the firm in the ordinary course of business. In this, you can say the, the person has been got loan from the other person, or the goods and services has been given for credit. That is called as receivables. So we call them the person who is getting the product for sales is called as debtors. Accounts receivable implies futurity. It will be received only in future. So it is uncertain. And it is also a marketing technique by granting the trade credit to protect the sales and from the competitors and attract the potential customers so that they will be coming to buy their products in their own favorable terms. So customers from whom the receivables have to be collected in future are known as debtors. So next we are going to see about forecasting of one second, forecasting of receivables management. So first one we are going to see about uh, credit period. Credit period allowed. The longer amount remains due, higher will be the size of receivables. Whenever the credit has been given for a longer period of time, the size of receivables will be higher. Second one, effect of cost of goods sold. Sometimes it increase in sales result in the decrease in cost of goods sold. The increase in sales will also increase the amount of receivables. When the credit sales has been given in a higher rate, the receivables will also be in higher rate. But it is uncertain because we are not able to say whether the person is able to give it back at a stipulated period of time. And next one is forecasting expenses. Administrative expenses on collection of amount and cost of funds tied down and bad debts are the forecasting receivables that we can predict in future how they are going to be able to give the amount. So it will be increasing the receivables and also it will increase the profit by increasing their sales. So credit sales should not be allowed if the cost of receivables is more than the income. So other hand, if the revenue earned as increase in sales is more than the cost of receivables, then the sales should be expanded. And next one is forecasting the receivables management. In the fourth point is forecasting average collection period and discount. The time allowed for the payment and the availing discount are the most important thing in the forecasting average collection period. We can say it in another form as average collection period is equal to trade debtors into number of working days divided by net sales. And next one is average size of receivables. It is we can determine the average size of receivables by with the help of forecasting receivables. That is, average size of receivables will be calculated as estimated annual sales into average collection period. So next we are going to see about the dimensions of receivables management. First one is forming of credit policy. In that we'll be able to see about the quality of trade account or credit standards. So volume of sales will be influenced by the credit policy. The credit policy will liberalize the volume of sales, which is to be uh, increased in result. It will increase the profit. So volume of sales is also associated with the risk. And second one is length of credit period. Length of credit period means the period allowed to the customers for making the payment. So they have to mention the time period Within the time period when they are giving the amount, you can go for giving certain cash discount. So there is no binding on fixing the terms of credit. So when the volume of sales increases, it depends upon the terms of credit depending upon its customer. And the next one is cash discount. Cash discount is allowed to expedite the collection of receivables. So to make the customers to make the payment very fastly, you can give a cash discount. So it involves cost. So finance managers should compare the results when it is released from the funds and the cost of discount. The discount should be allowed only if the cost is less than the earnings from the additional funds, or else it is not profitable to the organization. And discount period. Collection of receivables is influenced by the period allowed for availing the discount. So additional period allowed for this facility may prompt some more customers to avail the discount and make the payments. Second one is executing the credit policy. In this, we have to take into consideration as collecting credit information. We have to know the information has to be gathered about the customer. Where we have to know about the financial position of the customer, whether he is able to pay the amount or he pay the amount, or it will as it includes the bad debts, so it should be reduced. So we have to collect the credit information related to the customers so that we can avoid the bad debts. And second one is credit analysis. After gathering the required information, the finance manager can go for analyzing the credit of the potential customers, whether they are satisfying our standard of concern or not. The credit analysis should be determined by the risk associated with the account and the capacity of the customer to borrow and his ability to willing to pay the amount back. And credit decision, credit worthiness of the customer. The finance manager has to take the decision whether the credit is to be extended. If yes, up to what extent the level can be extended. He have to know the credit worthiness of the customer according to the credit standards of the company. And the next one is financing investment in receivables factoring. So account receivables block a path of working capital. In this longer period, receivables will not be tied up. The finance manager has to take efforts to get the receivables finance so that the working capital needs are met in time. Everyone knows what is working capital. It is day-to-day expenses. So they have to meet the day-to-day expenses in time. So bank will allow the loans against the security of receivables. So we have to determine the amount of loan, and a bank will accept the receivables depending upon the parties only. So next one is last one is formatting and executing credit collection policy. The collection of amount from the customer is very important. The concern should devise the procedure to be followed when the accounts become due after the expiry of the credit period. So it has to be very strict and also to be lenient. The strict policy of collection will involve more efforts for the collection. So it has both plus and negative effects. So the policy should enable the collection of dues and it will reduce the bad debts. So the money collected will be used for the other purposes and the profit of the concern will go up. So the collection policy should be having the following steps. That is sending a reminder for payments, and second one personal request to telephone, and third one personal visit to the customers, and fourth one taking help of collecting agencies, and lastly we have to take the legal action if we are not able to pay the amount at a stipulated period of time. The last should be taken only after executing all the other means, so it will give a bad impact on the relationship with the customers. So genuine problems of the customer should never be ignored while making the collection. So the collection book dates will be monitored with the use of average collection period and the aging schedule. So that's for the cash. Thank you, students.